Good morning from Amsterdam. Today on TBLI Radical Truth, we have a brilliant person. I thought it was French, but I could be wrong. It could be Canadian. Thibaut Soret, who is the founder of Equitable Earth, taking on one of the great challenges. But instead of me telling who is Thibaut Soret, who you are, what is Equitable Earth, what is your big purpose, and tell us a bit about your journey. Why don't you inform the audience as to who you are, what you do, what is Equitable Earth, what are you trying to accomplish, and ultimately how we can help you?
Hi, Robert. Thank you for the introduction. Thank you for having me on. I'm Thibaut. I'm co-founder and CEO of Equitable Earth. I am French originally, but I
Okay.
grew up all over the world in China, in Canada, in Argentina. Now I'm back in France. Equitable Earth is an organization that certifies projects on the carbon markets. We exclusively focus on nature-based projects, so conservation, Red Plus, and restoration, ARR projects for the time being. We started this back in 2020, but really the origin story dates back to, I'd say about 2017. I was a chief of staff in a company that went from 50 to 750 employees.
Whoa.
And so it was a lot of learning how to build teams, how to build a company. But alongside that, I became fascinated with biodiversity. Through various trips that I had done in Latin America, I got to experience the Galapagos and Patagonia. And it's hard to come back from those places unmoved by the sheer vastness in the case of Patagonia and the sheer abundance in the case of the Galapagos. And when I came back from those trips, I decided I wanted to dedicate the rest of my career to halting biodiversity loss as much as we could and preserving and expanding the world's remaining wild places. Didn't know exactly where to go from there, and so I decided to learn. And so alongside that job, I ended up doing a master's in biodiversity and ecosystem health to better understand the problem before I started diving into the solution. And in 2020, finished that, sold my shares in the company I was a part of before, and used all the money I had to start what became Equitable Earth. Originally, we had a bit of a different name. We had
Oh,
Wild
yeah, that's
Suns,
right.
then
Yeah.
ERS, and then earlier this year we acquired another standard that was doing similar work. We were focused on restoration, they were focused on conservation. We thought it'd be a really good idea to start unifying some of the carbon market standards into a bigger, more robust, independent body that could move forward and really take this mission on. So we were the right party to do that. And so we ended up taking on Equitable Earth and taking the name.
And why do you think that the world needs another standard or another
Mm.
verification system? Everyone talks of the ones that have been established, and also everyone complains about them. No one is saying, "Oh, they're fantastic. I got the verification super fast." So, why do you think it's important to start Equitable Earth? Because it's probably not that easy.
I think it all starts with looking back and being grateful for the work that's been done by the existing players. I think you can't be here, we can't build what we're building today without 15 years of foundational work done by uh, Kyoto Protocol and everything that led to. Then the first bodies, you think of Vera, you think of Gold Standard, you even think of Plan Vivo, right? That started in the late 90s. All of these programs brought some of the foundational pieces, permanence, additionality, these principles, and how to put them into operations. I think what we're bringing now is a layer of technology and speed that the market hasn't had to date, and that it needs to get in order to scale from where it is today to a market where money is flowing to projects at a scale commensurate with the scale of the problem. Throughput is a really, really undervalued piece of this equation. We think, oh, well, the demand needs to scale, right? My first question after that is like, great, how much supply can we get through the pipeline
Mm,
if demand goes 10x?
right.
And the answer is today, we can't grow 10x. The infrastructure the market has won't allow the supply to grow alongside the demand. And so that we've been laser focused within our space, right? Nature-based solutions on building solutions that can scale and that can grow as the demand comes back. And so that's what we've been focused on.
And what is stopping the pipeline or the supply if climate um, destruction is only increasing
Mm.
and nature consistently offers the cheapest way of doing it? But all the money goes into nonsensical climate tech solutions like Climeworks, a company that raised over $1 billion, and they admitted that they produce more CO2 than they actually draw down. But they'll do 10x and they'll do an IPO. So what is stopping more? Is it mainly people don't value nature? There's no 10x, there's no IPO by restoring nature?
I think that's like one everything everywhere all at once. And a part of that is the nature-based solutions. I think sometimes people focus very much on, well, we're putting emissions up from geological storage, right?
Hmm.
Fossil fuels into the atmosphere. So we're going geological to atmospheric. We surely need to bring atmospheric back into geological. And that's true. But if you look historically, about a third of historical emissions have come from land use change, from the biosphere going into the atmosphere, right? Carbon from the biosphere going to the atmosphere. And so we also need to, one, stop doing that, and two, put a lot of what's been put into the atmosphere back into the biosphere, right? We can't pretend like it's all fossil fuel that's gone up. We also need to take care of the parts of it that have been dropped out from the biosphere. So any way you slice it, like there is no path out of this without nature-based solutions. Supply is there in pockets, but typically not structured in a way that's buyer friendly yet. So you'll have a lot of the largest buyers that'll look for, say, in restoration, minimum 10,000 hectares. And you and I probably both know a dozen wonderful place-based organizations
Hmm.
that have been working for 20 years on a 500-hectare piece of land
I know, yeah.
and would love to have the resources to scale that, double it, triple it. And if you take that long tail, you probably end up with a lot of supply, enough supply to meet quite a bit of the demand. But the minimum deal size that many organizations are going to require, for example, in order to even start their due diligence is larger than that. And so you'll have newer players that are well capitalized that'll come in and tailor make these projects that effectively fit the end criteria of the buyer and work back from that. And they'll tend to have a lot of success. Some of the organizations that have been doing this work for 20 years aren't at a place yet where they're structured enough to do that. And so I think we have a tale of two cities with these newer project developers, great intentions, well resourced, super smart, moving really fast. And then this group of organizations that have been doing fantastic work for a really long time that have place-based knowledge, which I think we can't I can't underscore how important it is to have place-based knowledge. Here we were talking about restoration, right? Which species are you going to bring back? But the same goes with conservation, perhaps even more, where all of it is, or a lot of it is about relationships with the community.
Hmm.
You can't replace a relationship with the community with a 3-month FPIC process, right? A decade-long set of interactions is very, very hard to replace. And so part of the question is how do we level up the players that already have been doing the work to a place where they can access the market? And I think that's part of where a standard can come in. If you look historically, the onus of calculating carbon credits was put on the project developer.
Hmm.
Now, that has several implications. One, there's an inherent conflict of interest, perceived or real, in asking the project developer themselves to tell the standard and the VVB how many credits they should be for. And that can show itself in a variety of ways. For example, how is the biomass being estimated? You can choose from the literature any number of ways to calculate biomass that may or may not be as advantageous, right? And so there will be selection bias at various forks in the road for a project developer. And even if you have a fundamentally good actor, they'll always be incentivized not to take the most conservative option, but rather the one that's going to help the project do well. By centralizing carbon calculations, we eliminate those conflicts of interest or reduce them to a large extent. And on top of that, we lower the barrier to entry for organizations that have been doing the place-based community work for a really long time, that have a deep ecological knowledge of the species, of the ecological condition, of the various interactions between the soil, the hydrology, the vegetation. We can let them focus on that work when we centralize that carbon calculation work, which they don't then have to learn how to do. And make no mistake, this is not easy work, right? It
No,
typically
no, I'm sure.
requires a team, sometimes a PhD or multiple PhDs to carry out this work. And so by centralizing that work at our level, we hope to give more market access to some of these organizations.
You brought up that point about community engagement. My wife worked for 25 years in Bhutan, and she built a very successful hotel school, but a vocational training because there was tourism, but not staff for food and beverage, housekeeping, etc. So she built this school, and it was very successful. She transferred ownership to the partner. And she kept getting contact from like B Corp saying, why don't you become a B Corp? So she looked at B Corp and she was really very angry because she found it incredibly flawed on the most important thing, community engagement, because they don't even look at that measurement. And he says, in an emerging market or a frontier market, if you do not have any connection with the community, you will get nowhere, nowhere. And she's not doing, for 500,000 hectares. She's building just a vocational hotel school. And so I totally agree with you. But what we're seeing now with every single major financial institution creating a carbon desk or a nature-based solution or pension funds all getting in, they are not interested in climate. They are not interested in community. They are not interested in nature. It's just another CDO for them, a collateralized debt. It's just another product for
Mm-hmm.
them. And we've seen that visiting some of the so-called big players. They have no idea what the hell they're doing.
Mm-hmm.
But they see a business here, the same way as people weren't interested in ESG and impact, and then they saw a business to make money. So you're purpose driven, I would imagine, the people who are working at Equitable Earth. It's not just about, generating returns, maybe for some of your shareholders, but it's quite purpose driven. So if you had to wave a wand to kind of clean up all of the abuses, lies, Abu Dhabi, Zimbabwe, South Pole, that whole story, nonsensical claims from Norway, which are never met, what would you change with respect to the financial sector who
Mhm.
are funding this, whether they're, part of an airline industry with their new regulation for offsetting or data centers in the US that need to offset.
So this is a personal view, not necessarily an equitable Earth view, but
This is your time. Just speak the radical truth. We have no sponsors and we have no censor.
sounds good. One of my personal views is that the most straightforward moral position to have is the polluter pay principles,
Hmm.
right? We operate in this delusion sometimes as a society that if an organization is able to offset, even contribute, like either both compensation claims and contribution claims, that somehow the organization, if they're able to access this, it will enable them to pollute more.
Mm,
And in so much as this is not a regulated market,
no.
for the most part, this isn't true in practice, right? If an organization does not buy the credits, what actually ends up happening is more bottom line, which will then factor in, if they're profitable, the more dividends for their shareholders. And so the choice isn't, well, if they buy these, they're actively avoiding reductions somewhere in their value chain. Oftentimes is they're looking at that. I was talking to an industrial uh, producer. They produce most of the glass bottles in Europe. And they were telling me the furnaces they have and the type of energy that goes into these furnaces. They put these furnaces 10 years ago. They have a 30-year lifetime. Right? There is no chance they're going to retire these machines before their end of life. And so what basically
Mm,
their emissions curve is not going to look like a linear uh, slow, progressive down. It's going to really be step functions as these industrial machinery needs to be replaced, right? So what do they do in the meantime? Do they do nothing or
mm.
do they do something? That's really the choice they have, right? And so I'm not saying this is the case for every organization everywhere, but it's not uncommon that organizations are really doing their best trying to figure out where they can cut now and where they're going to have to cut later. And they want to do more. And that this provides an option to do something more, to take responsibility for the impact they are having. And I think that's fundamentally a good thing.
But you have lots of carbon traders
Yep.
getting in here. And I got a text from somebody with great pride. We filled up this massive ship with biofuels and animal feed and shipped it to Europe so they can burn it in as a biofuel, offset.
Mm.
When, hey, what about all of the CO2 from collecting, moving, shipping? So. Unfortunately, there's just so much. There's 5 times more wealth than global GDP. Many people don't realize how much wealth there is. A lot in real estate, but there's still a lot of money available. But it's still chasing unicorns.
Mhm. Yeah.
And I remember I was speaking or I saw an interview with Professor Ratan Lal. I don't know if you know Professor Ratan Lal, but he's like, nearly Nobel Prize winning soil scientist. Teaches at
Mm.
Ohio State. I think he was a mentor of Al Gore. Very humble guy. You should check him out.
Yeah.
And he said if we restore the health of the soil and vegetation, we can draw down 330 gigatons.
Mhm. Mhm.
Um, when all of these other things, particularly in the climate tech space, they never publish one bit of information of how much carbon drawdown they're doing. But they're all
Mhm.
climate tech, and I keep saying they're unicorn chasers. Um, so you've got the financial sector, which either acts as an intermediary or off its own balance, that you want to get
Mhm.
interested
Yeah.
in this to pre-fund or whatever. But because of the issues in the past of abuses in the
Mhm.
carbon system in nature-based solution, the demands are even greater in prove to me that you don't need the money, basically. You know, when the credits are already in, maybe I'll give you some money. So how do we bridge that?
I think part of it is working back from the finance as opposed to working forward from where we are. There's, I'm fundamentally a pragmatist, right? It just,
Yeah, of course.
because I do think there is a path for a lot of projects, a lot more projects to be funded if they work back from where the demand is coming from and what the demand is requiring. Now, there's like, to be very sure, there is a gap, and that gap is not necessarily narrow for us to have a large bridge. One of the biggest gaps I find is large in risk, small in capital. And I think that's
Mm.
perhaps where there's the most opportunity. And that's that catalytic capital really early on. So one of the things I would love to see is a really early stage carbon fund
Mm.
that helps projects get from feasibility to validated PDD or project design document. So basically from I've got a good idea, I've talked to
Mm.
some people that this is the concept I've got to here's a validated project by the certifier. Because once it gets validated and then you can go to say a ratings agency or what
Yeah,
have you
yeah.
to
Sure.
whatever you need to reassure the buyer, the people willing to bank that there's plenty, right? Especially because then you'll be able to get an offtake, all that. Early stage, nobody wants to, or like very few people are funding that part. And it tends to
No,
be a
no, so
100K,
no,
500K,
no
not 20.
multilateral, no DFI has provided any facility for that.
So I can't say if none have, I don't know. But
Hard to find.
it's hard. The vast majority of project developers I talk to are not benefiting from this. They're effectively either underwriting that on their own balance sheet, which requires them to go raise money, typically do sort of equity raises. And it can work if they're sort of uh, the right team or already well resourced. But most aren't able to bridge that gap. And so what they do is they try to go find a loan here, they go try to find uh, a request for funding proposal there, and the project will move at the pace of those tenders. And so you can have a project that is, I'm thinking of one right now. They've been trying to get the project off the ground since 2012,
Oh, wow.
right? And like I was moved to almost tears when I was talking to them. I was like they were going through like all the ups and downs and like and then the funding was it and then USAID funding got pulled and then this happened and then like, it just all the ups and downs and it's just how do you build a project in that environment and on that funding stack? But right now, I don't think you necessarily do, and so I do think there needs to be a maturing of the funding stack, especially at the earliest stages, for a project to move down. Because if you look at sort of like the Mombacks and the Regreens and like a lot of the larger ARR players, they're figuring out ways to access larger pools of funding because they're able to do these earlier stages on their off their balance sheet. And so the question is like, how do we get more project developers to be able to replicate that by giving them access to finance in the early days? That's going to then be able to help them unlock those larger pools of funding.
But you're not providing financing.
No, we are not. We are not.
Okay.
But where we can help is, I'll give you an example. Like, it used to cost, it still does, to projects to get that feasibility document. Consultants will charge them 50, 70 to 100 grand for something that we can do effectively. Like, I'm not going to say for free, like we charge a little bit for it, but an order of magnitude less in many cases. And so and for us, the reporting, um, we mainly charge to get rid of the tire kickers, right? Like we could in some cases offer it, um, in certain cases even lower than that. But the question is like we need to try to figure out where we're going to use our resources and who to give these analyses to. But this part can now, with the centralization of carbon calculations at our level, if a project developer has identified a piece of land, has built a deep enough relationship and trust to get to free, prior, informed consent, the project developer can move quite far along in the journey with us taking care of some of that burden that they used to have to take care of, and pay consultants really high fees for.
But you see, as I said, every bank, most money, the big pension funds, like Nuvei, they have nature-based solutions, in all the desk focusing on that, but it's often just buying farmland
Mhm.
in Australia, New Zealand, or the US or Canada, but not necessarily actually restoring the soil either through the various methodologies like Alan Savory was talking about and what many other people were doing. So they have the assets and they're able to tick a box and show we're doing something. But if you approach them about true community development, this is hard work,
Yeah.
nature-based, true nature-based. It's hard work, you're trying to win the trust of a community that's been screwed over many, many times, and they
Mhm.
just often don't trust outsiders. Your system, as far as I understand, has worked a lot with indigenous communities to do it properly. So, can you talk a little bit about that, of how
Mhm.
you did that, or or you didn't do it, and I just made that up?
So we've always focused on community-led projects wherever we can, and uh, so us as the original entity, uh, ERS that ended up acquiring Equitable. Equitable Earth was also purpose built with this in mind, and so as part of the consultation process in building the original documentation, there was a multi-year engagement process with indigenous peoples, primarily in Brazil, to understand what principles of engagement would be important to them in order to participate in the carbon markets. And then from that, a lot of the documentation was written, and then that documentation is the documentation we acquired. On our end, we've kept the spirit of a lot of those principles. That it's all the way through. So if you look at our standard, uh, we it's a not a triple bottom line, but it's a three-pillared standard. We look at ecological condition,
Mhm.
carbon, and livelihoods for every single project. Now, that livelihoods pillar starts with the principle of self-determinism. A community should be in charge of deciding their own future, what they would like out of the project. And a lot of those rules are historically the ones that we've designed and incorporated from this. Right now, we're in the process of building a new technical advisory board, or working group within the technical advisory board. 5 to 10 people. We're still deciding how many,
Mhm.
but it's going to be all indigenous, and they will help us with feedback on any future version of the standard moving forward, specifically on that livelihoods pillar, to try to make sure that stays a really strong part, and it's not us deciding without that being a conversation. It really is a conversation. And maybe just to segue, like what does this look like in practice? Like what does good look like in practice? I was just in Brazil for 3 weeks, and I went to Sao Paulo. I had my meetings there. I went to COP. I had my meetings there. But I also went to the field. I spent a week in various projects, including an indigenous land, and met with, throughout my trip, probably 40 caciques or chiefs, and at that project, probably a dozen. And their knowledge around carbon markets and carbon projects blew me away. They really very knowledgeable and very clear in their intention that these are their projects.
Mm.
They are the proponent. They are the protagonists. They kept using that word, like estamos protagonistas. Like we are the protagonists. And right now, they still need the help of various technical providers to access the market. But make no mistake, their intent, medium to long term, is for them to be able to have developed enough internal capacity to be able to run these projects. And I think when the market moves to that, or as the market moves towards that, we're going to see a very different set of projects coming to light, because that principle of self-determinism just gets cranked up to an entirely new level when the community is not a beneficiary but an owner.
Right. Yeah.
And I think that's where the ball is going. I think that's where the market is going, and honestly, I hope that's where it's going, and I think it's where it should go.
We recently, or actually, we're posting today. We did a podcast with Richard Sandor. I don't know if you know Richard Sandor, but he's like the godfather or the father of the carbon market industry. He created the first exchange for acid rain, and addressed that, and was able to show taking a market approach actually did reduce acid rain. And started probably several decades ago, and helped establish in other places. And he told me that, when we started, everything was voluntary. It was all voluntary. Market doesn't mean that it can't work. And it was hard work. It was very, very hard work. We're talking, 20, 25 years ago, a long time ago. It was very challenging. But he's totally, totally bullish on the potential of using markets to address climate, but also on a much larger scale going forward. So he totally believes in the voluntary movement. He said, we proved that it can work. It's not easy. Of course not. It's not easy. And nature doesn't have an IPO, and it doesn't have the true value. But if you can't breathe anymore, then it's got a value, or the water is polluted, or soil is hopeless. And so I also, like you, see massive potential, but it's most of the, as you said, most of the projects don't have funding to get them to the next level, that you've been able to reduce a lot of the costs and bring more efficiencies. That's spectacular. And congratulations with that BNP announcement, at COP30. But at the same time, at COP30, there was massive disappointment that Saudi Arabia, the Gulf, Russia, and America put a kibosh on the idea of fossil fuels. Um, and believe it or not, in a previous life, not so long ago, I used to work on oil rigs in Iran, in France, in the Southwest, in the North Sea. So I know what it is to make a hole in the ground. And I understand that. It's just that the comments that, oh, we have to invest so much money in infrastructure changing to electrify everything and away from fossil fuels. And I keep thinking, in the 1800s, there were not too many gas stations. There were not too many refineries. All of that stuff got built over a long period of time. This can happen much quicker. Doesn't that frustrate you that the solution is very clear? It's very simple, but it might not get you the 10x that you keep chasing.
I mean, I so many branching off points. It's just for me, again, like hats off to the people who try to make multilateralism work because like sitting in that plenary and watching people uh
Wow.
argue about like the placement of a comma for 30 plus minutes. It is just like uh, sometimes you wish that there was a
Yeah.
screen in the background with just like scenes of like deforestation, like things happening. Just be like, all right, like guys, guys and girls, let's let's move things along a little bit. And then yeah, at COP, like you said, on the sidelines of COP, you have a lot happening. And so I think like the question is like, what can we do? And one of the things that you talked about is infrastructure.
Mm,
And like, how do we get people to care? Some of the
right.
main things I'm saying here. And how do we get people to understand that nature is valuable
Right.
and important now, not just when things fail?
Exactly.
And so here you have horizontal and vertical dependencies that you can think of. Not my concept, but I really like it. So vertical dependencies are basically value chains. If you're a chocolate maker and suddenly your West Africa chocolate production gets completely ravaged by insects, or there's drought, you're going to have problems. And there are only so many places where you can have large scale cacao productions. They're not
Mm,
infinite. And there's competition amongst cacao players. And there's a limited, depending on who do you ask, you'll have different elasticities for the demand of chocolate. But at a certain point, people won't pay 10x the price, or at least not in those volumes. And so you have to start asking yourself, do I start investing in my basins of productions to make them more resilient and take a landscape approach? I don't just look at my production site, but like the valley surrounding it. How can I preserve some of the forests around? How can I restore connectivity between some of these places so that uh, the overall landscape is healthier? So you've got that. You've got sort of like a value chain vertical dependency. And then you've got regional dependencies, and they interact, right? If you have, for example, a hydroelectric dam, like you have a vertical dependency on the various landscapes that are upstream of you because those forests are the ones producing water. Another example, I was at a project site, our first certified project in Brazil. It's a wonderful place called Sinal do Vale, and from the top of the project you can see Christ Redeemer. So like it's very close to Rio. And down the hill, there is a Coca-Cola manufacturing plant or partner plant that's pumping about 1 million liters of water a day for free into its production process. Right behind it sits Mata Atlantica, the Atlantic forest. The dependency could not be more clear. That forest isn't there, they don't have the water. And yet there is no payment
no, of course not.
going back. And so nature is infrastructure, or nature enables infrastructure. And how do we make that clear? How do we tie those dependencies that are either value chain related or regional related? How do we make those links clear? And so in our work, for example, it's nowhere on our short-term roadmap, but someday I'd love for us to think more about water, right? Like water as a dependency, because you have carbon as a liability,
Right.
but the carbon as a liability doesn't necessarily have the implication that a dependency has. And so
Correct.
this is something that I've been thinking about. I don't have a solution yet, but that link you bring up is like, how do we make this more real for people? How do we make people care? It's something I think about a lot. And if you have ideas, I'm happy to jam with you to try to figure out ways to make it more real. Because I do understand it. It's just it's hard to get people excited about a technology that's been around for 4 billion or for
Yeah,
2 billion years, right?
absolutely. And it's,
New is always shiny, and
yeah,
so how do you get something old? How do you make that exciting? Yeah.
the, I just finished writing my book, Radical Truth, and we cover actually all of the elements. It's kind of like a George Carlin rant about everything wrong with the financial business school capitalist system measure, ESG measure. And so it was quite, it gave me dealing with the financial sector for so many years, over 25 years, it was a lot of inspiration to go on my rant. And one of the people that I met over the years was a man named Albert Appleton. I don't know if you know Albert, but Albert was was really the god of water. He
Mm.
was head of the EPA in New York,
Mm.
and
Yeah.
I think it was under Dinkins or after that, he got a letter or a call from the U.S. EPA. He said, "Hey, you're going to have to put filters for New York's water," which New York never had filters. And he said, "Oh shit, how much is that going to cost?" So quite a few billion. So, oh, we don't have that. So he proved the value of nature. He worked with all the farmers, restored the watershed. I think it was 500 million, and that saved them billions in building these water filters and gave away low flush toilets and eliminated all of the loss. And you should look him up, Albert Appleton. He proved the value of and the cheaper value of that. It's really the New York City watershed is a landmark. And we met quite a few years ago of trying to do that with line items. This money is going to keep
Mm.
the cattle away from the watershed and things like that. But to kind of get back about getting buy-in, years ago, I was asked to give a talk to the Dutch insurance industry about climate risk.
Mm.
Years ago, I mean, I think maybe 20 years ago, 25 years ago, more. And I told them I'm very practical because I'm from Brooklyn, so very straightforward. I said, you're a country below sea level. Sea levels are going to rise. I would be concerned about it. Do you know what they said to me? They said to me, that's not a problem for us if sea level rises. We don't cover saltwater damage. So you can get very upset at the stupidity of the answer, but that was where their level of understanding was. So I put it in their terms. I, didn't shout loudly in Portuguese to someone who spoke Mandarin. I said, that's true, but you give mortgages. So if 200,000 homes are worthless because of sea level rises, you have a big financial disaster. He said, oh,
Mm.
and you have to always communicate in the language of the person
Yes.
you're trying to convince. Shouting loudly in a different language doesn't work. And that's really what we've been doing is just focusing on the people's hot button. How do you get them buying? And sometimes you have to tell them, yeah, you know what? Your children are actually quite ugly. You're not really doing very much. And that's also important. I was shocked. I
Mm.
just published an article about the impact mafia. And really, it's a very critical story about the impact industry.
Mhm.
There are some fantastic, wonderful people, but there's just far too many. And it went viral. I never got an article going viral before. Like 50,000 people were reading it, and 99% were like, finally, somebody saying what I've been thinking a long time. But only like 1% were trying to defend or deflect, that. So we have to always communicate in the language of the person we're trying to convince. You have to understand what's their hot button. And sometimes you got to tell them, I'm sorry, Thibaut, but your kids are quite ugly. So finding that balance, I never really found it difficult to convince the financial sector about sustainability. The
Mm.
challenge is access. Do you have actual access
Yes.
to the decision makers? And because I was asking people around, do you know Equitable Earth? People who've been,
Mm,
Common Land, who is, 1 million hectares in landscape approach as a nonprofit. Never heard of them. Well, wait a minute. This Thibaut, I know Thibaut, and
mm,
oh, that's great that they're doing that. So need to get that message out about what you're doing, and how can we help you get there?
mm. The people that we're trying to reach, there's two major groups. One is project developers. So if you have a nature-based project, specifically a restoration project, so native species restoration, or right now our biggest focus is conservation. So if you're
Right.
trying to protect land from avoided unplanned deforestation, please do contact us.
I
Um,
have two for you,
great. So
but I
that's
think one you're already talking to, Verdama,
yeah,
and then the other one is in Australia called Climate Force.
great.
They're working with Aboriginal, restoring a rainforest.
Super cool. Which that's a conversation for
Sure,
another
sure.
time. But
Anytime. I'm on the border of that, and a good guy doing that.
I would love to meet both of them. So
Okay.
I think that's one.
Okay.
The second one is buyers. I think and demand, bringing back and demand to a larger extent. I think I'm surprised by the relative resilience of the end demand. If you look at retirements over the last 4 years, they've stagnated despite all the scandals. I would have expected them to completely drop, but it looks like a lot of the traders, the speculative traders, went out of the market, but the people who are buying are still buying. The question now, though, is like, how do we get 10x the volume, 100x of the volume? And that's going to require bringing new people on board and bringing the ones that are already buying today to new levels of purchasing. And so, if anybody has questions on Equitable Earth as a standard, I'm happy to answer that. We've had buyers ask us upwards of 89 questions.
Oh, I'm
Yeah.
sure. I'm
And
sure.
so,
I'm
like
sure.
in back and forth. And so like we're very comfortable going through a due diligence process with a large, well-structured team, just like we are with a two-person ESG team where they're a little bit newer to the carbon markets.
Right. Right.
So those are the two groups we most talk to. And so if anybody listening to this podcast wants to reach out, would be happy to have a meeting.
Okay. All right. Well, we'll help facilitate that, and I'll connect you with those two. You were able to get this off the ground, so either you're a secret billionaire and you haven't told anybody, or you found someone to support, which was probably not easy.
Mm.
What do you want to do? What? Um, so congratulations on doing that. Um, do you anticipate, because the demand for offsets, particularly with the airline, they're never going to offset with biofuels. I mean, it's a joke even to consider that for an airline to do that. And you've got others. There's an institution in the Netherlands funding electrification of the airline industry, and Airbus is that. Okay, also far away, not impossible, but so with the demand only increasing and not enough projects ready, I would imagine that the price of carbon credits will skyrocket.
I think it'll increase over time. I don't so I see a structural short in terms.
So you anticipate that there will be a shortage of that? Oh, I
It,
think
fundamentally we put 50 something billion tons of CO2 into the atmosphere every year. If we had a balanced, if we had a balance, we wouldn't be in this situation. And so you can look at it you can slice it in many ways, but basically we have structural under demand today. As soon as the demand jumps even a couple percentage points, it'll clear out any good inventory, any inventory that's considered to to not be viable for the next phase will likely sit there. But you're already seeing this in certain project categories like ARR.
Mm.
Uh, everybody's buying on forward curves. Very difficult to get your hands on that project category. We expect the same thing to start happening with Red Plus. So like this new generation of Red Plus that's truly community led, in some cases community owned already, with a new set of methodologies with the math being a little bit different. I think in 1 or 2 years, the supply is going to get really, really short.
I've seen there's been some initiatives in Europe and North America about finding a way to compensate farmers to increase carbon drawdown in the soil, either restoring the health of the soil or particular type of grazing.
AMP.
And but I haven't seen much at kind of scale that, like an airline. Okay, we're going to work with the corn farmers in Nebraska. They're going to provide us tons, gigatons. Is there anything happening on that level?
On the ag.
Yeah, yeah.
Mm. So we haven't focused as much on ag yet. It's sort of the next frontier for us. Basically, like the vision that we have is you have landscapes, you have areas that are doing well. You want to protect those. You want to
Right.
restore, uh, reconnect as many of them as possible, and then you want to soften the edges. So you want to have maybe uh, working lands, working forests on the outsides to create buffers and limit edge effects into productive landscapes that are managed in a way that's a little bit more conscientious.
Hmm.
And so AMP, better soil management, all of the things that you're talking about. And so when we look at that, I think this idea of operating at a landscape is, I think, a really nice foot in the door for
Hmm.
getting that scale. Because
Right.
if you're looking at a Nestle, at a
Hmm.
Unilever, you can't come they what they really want is to be able to deploy solutions that work at scale.
Yeah,
They don't
sure.
want to go farm by farm, and so you really have to get to a point where the solution is a little bit more mature, and they can really deploy that. And so I think that's what we're working towards. I've seen there's a Greena in Europe is a company that shares shareholders with us. They've been trying to work at scale. There's a couple here and there, but I think there's a ton of work that can still be done there, and it's a
Hmm.
very exciting space. Like you said, the potential is absolutely enormous. Like we need to change how we manage soils.
A friend of mine, he's a regenerative ag genius. He was the under
Mm.
minister of agriculture for Peru, Tony Salas, and he built the largest regenerative ag lab in the world. It raised, I think, $73 million, which is a lot for a direct deal. And basically, um, his model was very simple. The farmers must make more money, and we do that by restoring the health of the soil and through biological treatments, which not chemicals, but increases yield in some cases 5x, but carbon drawdown goes up 3x, which is, and the farmers make more money. And
Sign me up.
sorry?
Sign me up. That sounds great.
Yeah, no, but the food industry is uh, it's a big
Hmm.
you can't do
Hmm.
this small. There's a
Okay.
reason like 10 control most of the food. These
Yep.
are, you need big. So when COVID hit, they had some issues. But he's a good guy to know. He's very
Okay.
brilliant he doesn't like organic because he doesn't think it provides enough yield for the
Hmm.
smallholder farm. It only works with smallholder farmers, only
Yeah.
that. So he's a good guy to know with what you're doing. Um, and what is the big ambition of Equitable Earth and You? How
I
big
think,
do you want this to be?
I mean, a point in our conversation is the biggest risk for us and for this entire space is perhaps not to think big enough.
Mm,
If you look at this, it's just like you said, like 10 food companies control most of the supply. If we don't work at a scale that works for those organizations, we're working suboptimal at suboptimal scales.
mm,
For forests, I mean, there's a part of the reason, one of the many reasons that we're talking with indigenous folks is like the Kayapo, for example, 8,000 people managing an area. They wouldn't like the word manage, but that are the guardians of an
mm.
area the size of Belgium, right? And you think about like just think about the implications of 8,000 people who don't have market access trying to protect a land the size of Belgium against illegal invasion. Like that is a monumental challenge. But like these are the types of challenges we need to take on if we're going to really start moving the needle. And anything short of that scale will not grant us market access with meaningful buyers
Right.
that can engage. And so I think that the risk is in not playing the game at a scale that like we need to have table stakes that are commiserate with the size of the problems and the actors that are needed to move the needle. Anything short of that is too small.
So do
So,
you have
so
family? Do you have children or any of
uh,
that?
I got married about 2 months ago.
Oh, okay.
It's funny
Congratulations.
as in the indigenous lands they kept making fun of me like you got married last month. Why are you here? Go back to your
Yeah,
wife.
yeah, exactly. I mean, it's my challenge has never been convincing the financial sector about sustainment. It's always convincing my wife that we're on the right path after 25 years. So, congratulations on that. We're coming to the end. I promised that I would try to keep it to 60 minutes. Any final thoughts? What you felt we didn't cover, which is really important?
I think we just need to the work just needs doing. And we need to one of our key values is sleeves rolled up, right? Is just doing the work. I think at this point, the solutions are there, the scale is there. A lot of it is like, how do we structure these pieces to be market ready? How do we make things large enough so that they can have market access? And I'd encourage this whole space to think a little bit bigger, especially in times where many people feel like the headwinds should uh, lead us to hunker down. I think this is really the time where we build that next level of infrastructure, where we use the technologies that are available at our disposal to move faster, to get to a larger scale, and we really start making that dense. Because when the headwinds turn and we then have momentum, we need to be ready and we need to deliver. It's all cyclical. It'll
Yeah.
pass. But while we're in this phase, let's build, let's build for that next phase of growth. And let's make sure that we make the most of that next phase of growth. Now is the time to build.
I re it, I just want to tell a little story, true story. I was contacted by a CEO of a Dutch foundation that had 500 million. It sold a hospital and, had this foundation.
Mm,
And he said, I want to start doing ESG and impact investing. So I called my wealth manager and I said, let's get started. We're going to make mistakes, but let's just get started.
mm,
And the wealth manager, no, bad idea. You're going to lose lots of money. Terrible. So the CEO said, well, okay, I'll go look for another wealth manager who can do that. And of course, that wealth manager said, no, 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 we'll do it. We'll do it. So they, ETFs and simple index funds and things like that.
mm,
And every year he tried to do a little bit more innovation, more things, maybe a little bit more risky and that. So I think it was after 5 or 8 years, I forgot exactly. He contacted me. He said, Robert, it's not really that hard to do
mm,
ESG or impact investing if you want to do it. but it's really hard to do if you don't want to do it.
Yeah.
And that's what I always found that, if
Mm-hmm.
people want to do it, it's not that hard, but they need to make a decision, no partial pregnancy with this, or you're in or you're out, as they said in Ocean's 11.
And how do we make this a default in,
Yeah,
right? Like, how do we make this an opt out?
yeah,
And please explain why you're opting out. And like,
exactly.
different conversation, but that's why I think the it seems like a subtle change in the SBTI rule book, but
Right,
they're asking organizations to explain why they're opting out of taking
exactly.
responsibility for
I,
their like,
yeah.
that is a subtle but meaningful shift.
Yeah, and that would be great also in the Netherlands. You have a very good pension system, but you don't have any choice.
Hmm.
You have to go with this pension fund, and you have no input into saying how it's invested at all. Where in Sweden, you can actually take some of the money. And I said, why don't we have like an opt-in or opt-out, the same way that you can switch mobile communications providers and energy companies. Why can't we do that with investment? Because then you'll create the scale. Thibaut, this has been a joy. Thank you so much for what you're doing. Let me just stop